Hey everybody, what's up? Today's Monday, September 5th. It was Labor Day. The markets were not open today. This is going to be a weekly outlook video from Booksy. So just jumping right in, you guys will remember this Gann chart setup that we had from a few fractals ago. So that's basically this region right here. You might be saying, Booksy, why are you using the same thing you used before? We know it worked really well in this region because you got that price target up here and you got the breakout timing for this. Why would you use it again over here? Well, remember that I think that this is actually like a A, B, A, B, A, B, and that you see that there's a repeating that's going on from here and outward. And it's essentially like everything has been shrinking down to a point and then it comes out, starts expanding. I believe the fractal sequencing from here forward is also expanding. Therefore, it's appropriate to use this particular Gann setup in this way as well. In addition to that, you can see that pretty clearly, that the setup is very similar. It's got that very interesting kind of shallow S-curve setup, right? That drops down and then bounces back out. I'm not entirely I'm not entirely 100% certain that this is going to hold, and I'll talk about that in a few minutes. I'm not going to talk about that right this second, but basically these two lines, these two orange intersection lines, what they represent is the mark from 34 down, and then this guy actually goes all the way back to the December, well, really it's the end of November, that top, that cat ear top, and they actually intersect right here. So very significant points, and this would indicate what? This would indicate like the final push out of a bridge. We've been looking at the master fractal for quite a while, and we think that, and we believe that because we've been studying it, that these expanding iterations that are occurring here are also occurring in a widening upward channel, which inevitably will break down. However, it doesn't usually do it until it propels you over the top of the macro downtrend line, which is this little yellow guy right here. Now, this would be a comparable spot if you were looking at like, well, what would that look like? It'd basically be here, right? And even if you wanted to, you could say, well, maybe it'd be more like that because yours is going right through the middle or something. It almost doesn't really matter, okay? This is another downtrend that represents what? Well, if you zoom out, you can see that this goes also back to a cat ear, okay? So this is a breakout point, and essentially all this is an exit of a bridge. And we know that the bridge, the exit sequences are all the same, which is one of the reasons why I pulled this out, because this was essentially like an exit from what? From the diamond bottom, and then it was going to be a breakout and a continuation. Well, looking at it from that perspective, you can see that it's possible, right? Very possible that we're doing something very similar. And I'm going to show you another example of this in a minute when we look back again at our diamond bottom. We're going to revisit that in this video in just a couple minutes. But this setup right here, this four top setup, the double bottom down here with the run up, it's mirroring what we see in an ascending accumulation. It looks very similar to a lot of the other ascending accumulations we've seen. There's a number of these across AMC stock. You don't need to just use this one. I just like it because it's nearby and it has this really clean Gann setup that has rotational symmetry that worked very, very well for us. So I'm going to use it again if it works well. This pocket region right here is really important because you'll note that if it does perk out 1-to-1, right, then this is essentially what would happen. Okay, it would follow the trajectory lines set up by the most steep of the trajectories coming down, which is this guy right here, and that's the trajectory that it would exit on. When you do it that way and you look at the comparison, you can see that, yeah, it actually is very, very close. And it's entirely possible, but it would definitely mean, yeah, after you're coming up sideways here, it could take a day or so, then you're going to see a really big push. Look at the bottom here and just notice the way that this thing's set up. It's very similar, okay? It actually dipped below the previous bottom, almost like into a liquidity zone. It did come back to what I would call high center liquidity, right, in this region, on this pocket, which is the same thing that our chart did as well. We came back to high liquidity. Now, I know you can't really see it because of the way this thing is zoomed, but if you actually zoom out to, let's say, like the 1 hour, this is actually the highest liquidity spot right here. Very, very similar, right, in terms of the setup, where you get this big push up just to test, and then you come back crashing down. Seems like you're going down, right, but then, of course, it finishes this S-curve very quickly, and you get the push and the mark up and out. all right? This is one that I'll be following this week. It's not the only one I'll be following this week, and I'm actually going to spend the rest of the time talking about another chart that we haven't seen in a little while, which is the diamond bottom. The diamond bottom still exists. I don't know if folks thought I forgot about it or something, but a lot of people are like, why are you changing all your stuff? I'm like, I'm not changing it. It's still there. The thing is like, there's not much else you can always glean like more from something, right? So it's like once you sort of see it, you're like, okay, I guess that's that. And then there's not really much else to track, right? It just seems a little bit hard to track. Well, I found a way of kind of tracking the two things together. Before I do that, let me hide this sine wave so that you can just see just the bottom. All right, so this is the structured setup that I have right now. These are the comparisons. What these lines are is essentially these are the liquid bottom, like A to B, where there's obviously a shift in the diamond. Both of these had that. This is it on this diamond. This is it on this diamond. Both of these are attached to a sine wave. So again, I just hid the sine wave on this one, but it's very similar to the sine wave on this, where you get the up thrust in the middle, you get the S curve down. The S curve actually takes you above these two parallels. These two parallels right here are parallel to this, again, this offset value shift on the diamond. And those two parallels are basically acting as supply and resistance zones, right? As you're moving across and downward on this sine wave. Well, as you're riding down this sine wave, right, you're seeing that these are acting as support and resistance. And what occurs over here is actually very, very similar to what we're experiencing right now, which is that you get a big, very big push up, right, where it seems like it's going to break out. And in our case, it actually came up and it tested the top, and it did. It broke it. It broke, I believe, the top of the macro downtrend on the logarithmic chart. However, this is TradingView, and you have to understand that all the charts right now have slightly different values. So anything with fibs that you see is TradingView fibs. Anything with price targets is TradingView price targets. All these trend lines are going to work a little differently depending on which program you're using right now, because the shift values are not all the same. However, I do believe that TradingView is semi-accurate because the comparisons are coming out quite well. All right, and I'm just going to say that. I'm not saying TradingView is 100% the correct one. I don't know that. I'm just saying that right now the comparisons are working okay. All right, so what I did is I basically just mapped this one, and I just started doing one-to-one comparisons between all these different things. I'm not going to go into high detail about it, but the point is, if you look at this should look very, very, very familiar to you. All right, because this push out is essentially, this fractal right here is essentially the exact same thing we just looked at on that Gann chart, right? Where you get the push up, the pullback, the little shallow S curve that becomes a pretty huge spike upward. What does it do? It breaks above, right, this downtrend right here, and then ultimately it causes a pretty huge markup that occurs before it sort of lifts its way up as well a little further. Now, when you're looking at this guy, it might be tempting to say that, oh, well, you know, if this is going to happen, then we're going to crash. Perhaps it's possible. There's a lot of other things that need to be considered here. Like, this is part of a huge setup. Okay, this is the beginning of the left. I mean, this is like, you know, the middle. I'm sorry, of the left side of this thing, right? And we're in a different situation. We're like way over here. Okay. So what we would expect from this might look similar. You might see that move up. You might see it kind of hang out in this region for a while. But after that point, when you get around to December 19th, that's where you're going to have a decision time. Just like here, you had a decision time, and they decided to go down. These are actually intersections on a sine wave. I didn't draw it on this guy, but if you remember, like, these intersection points are really, really important. They're very significant, and they do matter quite a bit, because they determine where a lot of these things occur. One of the intersections is right here. One of them is right here, where this went up and where this went up. And then, of course, one of them is here where it goes down. One of the intersections is here where you get a bounce, and then here where you go out. So these intersections are very, very important, and we're heading towards another one in the near future, I believe. Okay. Now, everything else on here, you can kind of just look at it. I don't need to tell you everything there is to know. But I did want to say a couple things just to prepare you for the week. So number one, these particular trends right here would be essentially like, this is like a 50-50 right here, right now. What they are is they're tangents that go back to the center point at the top. They're very important because if you do the same thing over here, you can actually see if you go very, very close, you see you do the tangents that go to the center points on the top. This points back to the top over here, but it also points to near the top over here, not quite. What I'm more concerned about is this trend right here. The fact that this pushes above it, and this is where it holds before it sort of drops down. We might expect something similar to happen right up here in this pocket region where you get the intersection of the diamond bottom target, and this is the diamond bottom target. So if you take the target from the top to the bottom of the diamond, you move it over to your breakout point, you find that, okay, that's your diamond bottom target. I did it more accurately. I believe it's 26.55. It's right around where this hook is. It could be a little bit higher, right? But the point is like where you intersect that essentially is like right around that September 13th to 15th region, which is of course where we expected to have the intersection of those two different things anyway. So that could be a pretty significant move right here to get to the top. Again, I'm using these trajectories as kind of a guide to help me understand the price action better. You can see that in both of these situations, they kind of crash on the sine wave. They bounce off of it, right? They do the push up, they come down, do the S curve through these kind of supply-demand parallels. They bounce off of, in both cases, the sine wave. They pass through it, and then they start a grind upward that eventually does what? Crashes again, and this time it comes all the way back to retest these guys. All right, once it retests it, it takes off, it pushes up, and then this is very significant. This one's a little difficult to find, but what I did is I used a parallel, but I found that, yeah, sure enough, that parallel, you can see there's actually 1, 2, and then there's a third touch point over here. There's 3 touch points on it, and it essentially cross-sections this guy. And you can see I drew it from here to here, and it goes all the way back, right? And it acts as a pretty important center mark for this region. Well, I did the same thing over here, and you can see that, yeah, there it is. It's actually, it's a little difficult because I don't think the markers here really make a whole lot of sense, right? And there's different ways you could look at this. You could kind of take it and say, oh, maybe it's a little bit higher, Booksy, like it's supposed to be up here. You know, you can just pick and choose which one you want to do. But the point I'm making is this is definitely like the similar region, right? You can see that this would be the platform, right? And this is kind of where it rejected. So it kind of come up here, creates this platform. This is where it rejects. It tests it again, right? And then it comes up here and it finds support, but it comes back down through it. The same thing happened over here. It actually came up above it, found support for a minute, and it came back down. And then when it broke out, it regained support here. Another thing that's really important is on the Fibonacci's here. And again, take it with a grain of salt. All the Fibonacci's are going to be a little different. If you draw a fib from the base here all the way to the top of this big breakout, which is where it intersects the sine wave, you'll see that between the 618 and the 0.5 is where most of this action takes place right here. On the one side, it's where you're kind of rattling around, right, on that trend. And on the other side is where it finally regains support. It actually bounces right on that 618 and goes. If you look at our region right here, sure enough, again, that's the price target right there. You take the Fibonacci from the bottom all the way up to that price target and look at where this set up. It's set up right between the 0.5 and the 618, almost exactly, which makes me think that this setup is not only very similar, but mathematically it's acting very similarly. Again, you might say, well, Booksy, what if you're wrong? What if the fibs are like here, or what if they're like here? Well, it's not different enough that I really care at this point because the rest of the setup to me looks very clean. So I'm less concerned about it in this particular instance. But yes, if you have a different bottom here, you probably also have a different top, which means you're going to have different fib levels, okay? Do your comparison versus this region over here, and do your best to try to make it as one-to-one as possible on your own charts, all right? So what are we looking for this week if we're thinking this is possible? This is a huge move, right? Well, again, I took those what do you call it, trajectory lines, right, going down and going up, and this is what I got. And yeah, again, sure enough, it kind of lands right in that target region. It's very, very close. There's a lot of things here that seem to be confirming the possibility of this move. But what would negate this move? Well, it's very simple. I'm going to keep it really basic, and then I'm going to end the video there. Basically, what would negate this move is a continuation of an S-curve, right? So you can see, like, in this case, the S-curve already went down and sort of broke, and it actually did exit the S-curve. The best way I could draw it was like right here, and it was very tight, and it exited on Friday. It pushed out and it looks very similar. If you go compare this fractal to this guy over here, which we were doing on the Gann chart, you can actually see that it's sort of like this, right? And it pushed through and then it comes back, regains support, and goes back up. That's all fine and dandy. However, if this were to continue down in an S-curve pattern, where would it go? It probably would go down to double bottom, because if you look at this just from a very generic point of view and you say, okay, well, let's look at this right here and go down to the bottom, you can see this is basically the 50% marker. That's exactly how S-curves usually work, is that if you're going to have a very huge elongated S-curve, usually around the 50% marker is where you kind of flatten out and then you start going different directions. So what would that mean? It'd probably mean that we would essentially be experiencing something around here. We have to be, right? That this is like widening out, and we're experiencing something around here, and we actually came out, and then we would coast down, right? And it could come down significantly far. However, we just looked at the Gann chart, right? And it seemed to confirm that, yes, this does break slightly below here, and yes, it did break slightly below there and test liquidity right around this hot spot. So it's like, okay, well, that seems to be the same, pretty much 1-to-1. In addition, this guy right here, it bounced right on it. It was perfect, right? It seems to be like, okay, cool. Well, obviously it did bounce off that trend. That's the same thing that occurred over here right before it took off. So you're like, okay, well, there's a possibility too. In addition, if you get close to this, you look at this trend right here, all right? Every one of these guys that came through here, I kind of messed it up a minute ago. Here, there we go. Every one of these guys, when they break out, all right, you will find that they retest at some point right there. They always retest the previous like stroke, right? Right here, you see that? And this is sort of like the one we're looking at right now. They all retest like the previous region, right? Like the previous downtrend. Well, this is what just happened. Like this is the last touch point we have over here. And this is the top. And the only line you can draw, and when you look at what happened on Friday, we actually bounced to that lower region. We hit that lower guy. We bounced and we hit that trend. And then we took off a little bit. And we got the nice big push up on Friday before we kind of settled down. Okay? So at this point, it's primed. It's in a position where you've got very, very low volume, which is what normally occurs right before you move up. You've got a decent amount of absorption of supply here. There doesn't seem to be that much selling going on going into this rounding. You've got the Gann and the diamond bottom sort of confirming that there's a stronger possibility that you get this big push up here and the run upward. But what needs to happen? You cannot break beneath this trend. You just can't. You can't do it again. I'll put it that way. There's no instance in which you come back beneath that trend more than once. And I can't find a good example of one where that happens and it's still bullish. So I think if this breaks down and comes low, it could come to like 827 or something. But if it starts tracking lower than these two guys right here and doesn't have a rebound very, very, very quickly within like a day, then I think it's highly likely, right, that you start seeing mid to low sevens and beyond. Okay? So that's it for the video. I don't want to go any further than that. There was a lot packed in here, but I posted these charts on Twitter and then also on the Discord, so if you want to go check them out, you can. The big thing here is just looking at the comparisons, looking at the setups, and they're very, very similar. There's a lot of things that make me think this is the exit of a bridge and that we need to get over the macro downtrend still, that we haven't finished. I'm not going to address the market on the whole. I realize that SPY might have something more or less just like a consolidation going on underneath its downtrend. It may not break its downtrend. It may end up becoming very bearish. We might expect to see SPY come up to retest some of that because it has that falling widening that's going on. However, you know, not going to get into that right now. The point is, SPY could really go either way, I think. I know people are like, well, the Fed's not lifting those rates. It's probably not bottomed. And I agree, like that's a big deal. Not dismissing that at all. But from a technical standpoint, it has the setup to go either way. That's all I'm going to say for now. Anyways, hope you guys have a good one, and I will talk to you later.